Afternoon, it's Quant Trade Edge, and today we're looking at the June natural gas contract. There was this swing high put in on January 9th, right at 289.1 on the June contract. And basically, gas fell and kept, finding a bottom here in this 180, 190 range. Looks like the lows here are 190 on the June contract. And recently we've had this very sharp rally. And this rally has not had a lot of rest. In fact, based on our Gann counting method, it's essentially one leg up. It's not even a two-leg move. And we can see that by just putting the Gann up bars on it. And you can see all the way from here, every single bar is an up bar. Well, really, I guess from here. So this was a down bar. But from this point, 1.913, 0.909. Okay, so I guess you could look at this as your first wave, and then this is another wave. But the point of this video is to say, when you hit a swing level of significance like this, you're going to get some noise at that point. If this market wanted to continue higher, that noise could be the form of an ABC down. But either way, it's a level at which, perhaps shorts would have had their stop above, and they got run. But it's time to start looking for a pattern when you hit a significant point like that. So here, this is a 1 minute chart. We can take it to 2 minute, make it a little less noisy. And here you can see on this 820 bar, we took out that swing high. And this is already a very overstretched market, and we put in this sideways flag to which we broke out to new highs and immediately failed. This, you'll remember, is the flat flag pattern, the final flag pattern, like we had in gold. I believe it was April 12th or so. There's a video about that. I'll link it on the end screen. And when you get a final flag like this, so typically you want to see a market that's already extended to the upside. Check. We have this huge daily move here. And then you kind of want to see a running correction, and that's kind of what this was. You kind of had this move here. It's just urgent to the upside. And then you want to see a pause. You want to see a flag, and typically this flag is a sideways flag as opposed to a downward sloping flag. And then you want to see a breakout and a quick failure. And that's what we got here. And that quick failure at roughly the swing level, that 289 level, came all the way down to 276. So you got over 20 cents of downside. And this was all before the inventory number, which is released today, the EIA. And really, all that inventory number did was create a wick going all the way back up there, just to stop 2 ticks shy of that swing high. And it got rejected again. And it basically spent all day going lower. So, really from this 289 level, we've come off 30 cents in a day. And, what's nice is if you were tracking this pattern, you could have entered in a manner in which you have limited risk. You would have entered on the break of here, so call it 289, and a stop above the high, 292.4. So maybe about a 3.5 cent stop to make over 30 cents. So downside, that's a good 8 to 1 or more return on your risk. So again, this is the flat flag pattern. On the end screen, I will put the link to the previous flat flag pattern that we documented, the one on gold. And let me pull up our Discord here. Let me see if I can bring it in here. For natural gas, did I Trappy? Yeah, no, I just mentioned when we tagged the previous swing high, and that's kind of when you're supposed to keep an eye on it. But this wasn't a pattern that we tracked and actually traded live in the room. But if you are interested in getting those types of alerts and more of this type of education, do look to join our Discord. There'll be a link in the description to this video. So anyway, I hope you had a good day out there trading, and this is just one of those beautiful patterns. I wish I would just do these, and life would be a lot easier if these continue to set up.